And good morning and welcome to the VSA Capital 5-Minute Morning Miner. And it's all changed today. I know I've been away for a few days, but I'm back. Paul is away for a few days. And we've got Ollie, so it's me and Ollie today. Morning, Ollie.
Morning, Andrew. How you doing?
Yeah, pretty good. City's definitely getting busier today, funny enough. I noticed after I'd done my bike ride in, I know you had as well, that the showers downstairs were far greater use than normal.
Yeah, it's starting to get busier. It didn't feel it on the roads, though.
That's because we come in so bloody early. Anyway, let's move on to mining, which, but anyway, I've been talking to a lot of fund managers. I had lunch yesterday with a very well-known fund manager, been around for 39 years. And, all the fund managers I'm talking to them do accept that mining as a sector is a pretty good place to be in the current sort of climate of worries about inflation, rising interest rates, geopolitical, consumer squeeze, etc., etc. So the space is looking pretty attractive, I think. So we need to find some damn good ideas for our listeners and investors. So, but anyway, on that note, what you got for us today, Ollie?
Yeah, well, that's definitely an improvement on not worth looking at all. Longcore Gold, one of our Shanghai Mining Club clients, they filed their PEA. They had announced it in December, but worth just highlighting some of the numbers out of that. They're based in the northeast of the DRC, close to Kibali. They found a huge gold deposit there. They think they can get an open pit mine to 300,000 ounces a year for over 10 years, which is a large project with AISC under $1,000 an ounce, for an NPV of about $600 million. And that's using their hydroelectric power case, which is obviously good for their carbon footprint, and slightly better economics than trying to just use diesel.
That is the way a lot of mining companies have got to start thinking about, actually, isn't it? Their sort of green credentials.
Yeah, and in terms of, in terms of the valuation and the company at the moment, it's pulled back a little bit from December when it was announced, but I think that's really more to do with the gold price than anything else. They do obviously get a bit of a risk premium and a discount for being in the DRC, but with those sorts of numbers in the PEA, you'd expect them to advance the project and de-risk and add some value that way.
Yep. Okay, what else?
Some results out from Meridian Mining. So that's TSXV listed copper gold project in Brazil. I don't think we've talked about it much on the podcast before, but investors who are interested in Tungsten West will know Mark Thompson from the board, and they've had some drill results out to date. These are twin holes for metallurgical testing, but they are broader intercepts than the company were anticipating, and it's really highlighting how big a copper gold project this is. 66 meters at 1% copper equivalent, which is split 0.6% copper and 0.6 grams per ton gold. So that's compared to the hole that it twinned from some years ago, which is about 42 meters at 0.9% copper.
Look, I think Mark Thompson, those that know him, is a pretty interesting guy to follow. He's exceptionally bright, and is very good at spotting new opportunities and making investors a pretty good return. We'd agree that following Mark is a good idea.
Yeah, and if you look at the share price performance over the last 18 months or so, as this has been drilled out and de-risked, it's clearly becoming clear to investors how attractive it is, with only 2,000 meters drilled out of, I think, 36 kilometers that they've staked.
Yep.
So in terms of London news, it's pretty quiet, but Sigma Rock have closed the transaction on their aggregates side of things. So they're paying £35.5 million for an aggregates business which is generating revenues of about 15 million pounds, EBITDA of 6 million pounds, and PBT slightly below that at about 3.6. So I think what's interesting there is those sorts of earnings are really quite similar to what we're projecting for Tungsten West once that starts to ramp up.
Yeah, go on.
Well, I mean, that's probably year 2 for Tungsten West before it's reached full capacity. But given that Tungsten West is a secondary aggregates operation, it probably should have stronger margins. But these sorts of numbers, somewhere between 8-10 times earnings, that looks a consistent way to value these sorts of businesses.
I mean, whilst on Tungsten West, I have been speaking to the management. I'm actually going down to site in about a fortnight's time to see how they're getting on, because they are getting on. It's very disappointing the price has gone to a discount to the IPO price, because actually everything is going to plan. We thought we listed it at a pretty sensible price. It is just a case of, people have been selling things where there's a bit of liquidity and trying to raise capital. This stock should bounce back strongly at some stage. 50p really is the wrong price. As I say, I'm down there in about just over a fortnight, and we'll report back from what I see. Anything else, Ollie?
I think that's probably it for today in terms of mining news. There's a few quarterly reports out, but not a huge amount of new stuff.
Okay, in case one of our clients, we have quite a few clients in Hong Kong, for them, Gong Hai Fat Choi, and I'm not going to try and pronounce it in Chinese because I'm not as good, but it's something like Jin Yan Ku Lei, but my Mandarin's not as good as my Cantonese. Anyway, very good, and we'll speak again tomorrow, Ollie.
Thanks, Andrew.